Hello guys! Today I want to talk about how I build pre-market plan using ICT concept. Okay, let's start with what levels usually I use. What levels I have on my chart every single day. Every single day on my chart I have New York Midnight Open level, previous day high, previous day low level, previous week high, previous week low level. Of course, I also have previous month high, previous month low level, but since this is my pre-market plan for exact day, such as Monday, Tuesday, Wednesday, I don't really need to use previous month high, previous month low level. Also, I use equilibrium of previous day range. I use equilibrium of previous week range, Sunday or weekly open, Asia high and low, London high and low. As you can see, we have red stars right here. This is three main levels that I need to use to understand where a market is going to go during AM New York session. Means from 9:30 to 11 AM New York time. First, I want to talk about how I personally use New York Midnight Open level. Maybe some people use this in a different way. Maybe ICT explains this also in a different way, but this is my approach, how I use a New York Midnight Open level. Okay, New York Midnight Open level. I use New York Midnight Open as a guide for New York AM session. This level is valid until 11 AM New York time. Once again, New York AM session from 9:30 AM to 11 AM. When I see that price is trading above New York Midnight Open before market opens, before 9:30 AM, I look to go short only after a 5-minute candle closes below that level. Once again, closes below that level at the open, after market open, after 9:30 AM or at 9:30 AM. I wait for the closure of 5-minute candle below New York Midnight Open and wait for confirmation. And this confirmation must be 5-minute change in the state of delivery. 5-minute change in the state of delivery or simply a 5-minute order block. Same principle applies for long trades. I wait for my 5-minute candle to close above New York Midnight Open level, and here is New York Midnight Open level, so I use NMO, short name of this, and look for confirmation with 5-minute change in the state of delivery or simply 5-minute order block. Okay, lots of people ask me, especially in my group, why you always use 5-minute candle closure, not like 1 minute or 15 minute. The 5-minute change in the state of delivery usually confirms intraday bias for me, while 1-minute change in the state of delivery usually confirms short-term bias, like for the next 15, 20 minutes, for example. And 15-minute change in the state of delivery usually confirms high time frame retracement or lower time frame reversal. Essentially, so basic understanding of how I use New York Midnight Open is when the price is trading above New York Midnight Open before market opens, I often consider this as potential manipulation. Not always, but often, most of the time. Similarly, if the price is trading below New York Midnight Open, I also consider this as potential manipulation. Once again, not always, but most of the time. Okay, here is an example. This green box is the area between 9:30 and 11 AM, basically New York AM session. We see price during pre-market trading like above these levels, and we got some sort of London manipulation right here, then price went above this level. At the open, price retraced down back to New York Midnight Open, failed to close below this level, and offered bullish 5-minute change in the state of delivery to continue going higher. Sometimes we can see like this. We opened above New York Midnight Open, it retraced all the way down, we got liquidity sweep, let me zoom in a little bit. We got liquidity sweep right here. No body closure below the wick right here, below this low. And then price went above this level again, and 5-minute candle closed above New York Midnight Open with formation of 5-minute change in the state of delivery. Here is an example. We see market was trading above New York Midnight Open. We are opened above this level, then price trading above this level. But with this retracement down below New York Midnight Open, we got the closure. We got the closure below New York Midnight Open. What does it mean? This means now I want to look for the short setup. We got confirmation with 5-minute change in the state of delivery, and I only look for short setup below New York midnight open, such as fair value gap right here. Okay, here's the tip. Works almost always, but once again, nothing works 100%. So I want to say it works pretty much often, but not most of the time. Like, not always, but most of the time. Okay, let's say like this. It works 90% of the time. If price is trading way below or above New York midnight open, most of the time you will see trend day. This means if market opened way above or way below, once again opened at 9:30 and until 11 a.m. we were trading way above New York midnight open, we can expect trend day. Here is example. We opened above New York midnight open. See, price never ever retrace back to New York midnight open, continue going higher. Trend day. Okay. Next, my approach to use New York midnight open with previous day high and previous day low level. Okay, let's look two examples right here. First example is going to be market opened below previous day high after taking this level during pre-market. This means before 9:30 a.m. market took out previous day high level, right? During pre-market, as I said right here. I anticipate a test of this previous day high level during RTH, means between 9:30 and 4:14 p.m. and then sell off. So I can call this as possible turtle soup on RTH chart. Turtle soup entry with targeting discount array. High data frame discount array. Exactly same idea for long here. Market opened above previous day low level. Here is 9:30. We opened above previous day low level after taking this level before market open. So here is the opening. We took out this level before market open. I anticipate RTH test of this level, turtle soup setup on RTH chart, and then long with target at high data frame premium array. Here is first example. Here's another example, second example, how I use New York midnight open and previous day high, previous day low level. Okay, market open above previous day high level after taking this level during pre-market, before market open. So we opened right here above previous day high level, but this level already was taken before market open. At this point, I anticipate continuation of the pre-market move, means I anticipate continuation higher until we reach high data frame PD array. In this case, high data frame premium array. I don't expect to see a New York midnight open this day, but I would say not really this day. I don't expect to see this level until 11 a.m. Same idea applies for shorts. Market open below previous day low level after taking this level during pre-market, means before market open. So we opened right here. This level was taken before market open. So I anticipate continuation of the pre-market move. This means I anticipate continuation lower until we reach high data frame discount array. And I don't expect to see this level until 11 a.m. I don't expect to see New York midnight open until 11 a.m. So this is what I wanted to talk. This is what I wanted to explain about New York midnight open. Next, I want to talk about equilibrium of previous day range. I don't see a lot of people use this level, but if you're trading NQ, you must try it. Okay, let's talk about this. Equilibrium of previous day range. Of course, it works for ES, for any other instrument, but I personally trade NQ, and for NQ it works so well. I use equilibrium of previous day range to identify the best position to sell or buy. What does it mean? So, let's say we took out previous day high or low before market open. I look for the price retest equilibrium of previous day range once market opens and then offer a reversal from it. Okay, how it usually looks like? Let's say NQ is trading inside previous day range. This means we never took out previous day high level before market open and previous day low level before market open. Moving from premium to discount, from discount to premium of previous day range. At the open, if market opens in discount of previous day range, I will be interested in final push higher back to equilibrium of this previous day range, that's totally fine to see slightly in premium. But I don't really expect to see deep premium at this point. And then formation of 5-minute change in the state of delivery to play short with target at previous day low level. I'm going to show you example soon. In another case, if NQ takes out previous day low level, for example, or high, in this case previous day low level, before the market opens, right, and goes way below that level upon opening, before market open. At the open, it usually retraces back up to the previous day low level. Sometimes, not sometimes, I would say sometimes price retraces back to the previous day low level, RTH test for example, but most of the time simply continue going down. And I expect to see continuation lower, but it's important to remember, here's important note right here, but it's important to remember that if equilibrium of previous day range was never ever tested before market open, means let's say market just trading above this level or below this level, we never ever did trace to this level, so never tested before market open. This level will be your daily objective. This level is going to be your target for the day. Even if we get a continuation lower after the previous day low retest, the equilibrium of previous day range will be likely reached during the PM reversal. So what time PM reversal usually occurs? I noticed that PM reversal usually starts around 11:30 and finishes at 3:50 PM. So this is time window that I use for PM reversal. Okay, we always measure from midnight to midnight. This means we put vertical line on midnight level and vertical line for another midnight level. We're trying to find high and low inside this time window. We want to measure from low to high, from high to low, and find equilibrium, right? So we see price was trading inside previous day range. So we never took out previous day high, we never took out previous day low level. At the open, it opened in discount, right? Then offered final push higher, slightly in premium right here, and then continue going down to take previous day low level. Here's an example. This example on NQ from May 9, right? Okay, we can see that price was trading inside previous day range. Moved from premium to discount, from discount to premium. At the open, we can see it opened in, I would say slightly in premium, then retested equilibrium of previous day range, continue going down to take previous day high level. Yeah. Perfect example, by the way. Here's another example, second case, right here, that was explained, was never tested before market open. So let's say we took out previous day low level, we were trading below equilibrium of previous day range all the time before market open. So at the open, we may anticipate retest of previous day low level, but sometimes, I would say sometimes we retest previous day low level, but most of the time price will simply continue going down. But let's say it retested previous day low level, and this blue box is PM reversal. This means from 11:30 to 3:50, I anticipate to see reversal where my target will be equilibrium of previous day range. Here's an example. We took out previous day high level. We opened right here. As you can see, we actually retested previous day high level, but price was some sort of choppy here. And at this retracement up, that was around 11:30, we got final push lower, PM reversal, where the equilibrium of previous day range. Then reversal from this level all the way up to retest previous day high and back to the premium of morning price action of this day range. Okay, this is how I use equilibrium of previous day range. Exactly the same idea applies for equilibrium of previous week range, but for entire week. Here's for the day, previous week range, equilibrium of previous week range for the entire week. Okay, weekly Sunday open. So if you want to consider weekly candle, we got open of this candle, we got manipulation, then range expansion, distribution. We got Sunday open, we got manipulation, distribution. range expansion distribution. So usually I would like to see Sunday as consolidation most of the time. Monday is going to be consolidation or beginning of the manipulation move. Monday, Tuesday is going to be end of manipulation and start of distribution. Midweek or Wednesday is going to be this range expansion. This means it's going to be real distribution right here. Thursday delivered to the weekly objective. This means most likely on Thursday we will finish our distribution, and Friday will offer TGIF. If price trades only above Sunday open during this first half of the week, the Pink Panther will offer distribution. So I'm going to talk about Pink Panther in the next video, but just keep in mind, so we are going to talk about this setup in the next video. The Pink Panther will always occur during the second half of the week. Here is example. So not best idea to use this green color here. I was needed to use maybe black or blue color, but anyway. We got Sunday open, so we got Monday, Tuesday, Wednesday. Second half of the week starts during the PM session on Wednesday. We see that price were trading above Sunday open in the first half of the week. So we got manipulation up, but it never offered distribution yet. So at this point, I anticipate to see Pink Panther setup during the second half of the week below Sunday open and then TGIF. Actually, price went even higher than TGIF stop. Just, I would say, 62% of this OT retracement. But here is a perfect example anyway. Okay, once again, Sunday open also nice to use for your daily analysis and for your weekly analysis. Okay, Asia high and low and London high and low. To anticipate direction during AM session, we closely look the direction during London kill zone. If I see that during London kill zone, price takes out Asia high, and offered reaction down back to the Asian range. Once again, Asian consolidation is 8 p.m. to midnight, New York midnight. So after we got move during London above Asia high, then we got retracement back to the Asian range, but Asia low never ever was taken until 7 a.m. Eastern time. This means from 7 a.m. to 9:30 we will see continuation of the London move. We will see continuation higher. I said this suggested potential upward move before 11 a.m., but I would say usually it ends around 10 a.m. So this is first case how I use Asia and London. Another case how I use Asia and London is in terms of power of 3. What does it mean? London runs the Asia high or low. Let's talk about high. Let's say London runs the Asia high. It then retraces back to the Asian range, Asia kill zone from 8 p.m. to midnight, and before 7 a.m. took out Asia low. Nice. We keep in mind that if this level never was taken before 7 a.m., Asia low never was taken before 7 a.m., we anticipate continuation of the London move. But if this level was taken before 7 a.m., what we want to see? Between 7 and 9:30 a.m., I look for retracement back to the fair value gap that was formed after the formation of short-term high, short-term low, in this case short-term high, to enter my trade. What does it mean? Typically, this setup becomes high probability setup when we have overnight consolidation, ideally Asian consolidation, but I usually look at a range between 8 p.m. and 2 a.m., basically until London kill zone. After this, I want to see manipulation between 2 a.m. and 5 a.m., but I do not take this trade. First, I usually sleep at this time. Second, I don't like to trade manipulation. I am only interested in playing distribution. Here is a key moment. I only interested in playing a real distribution. During New York IM session, manipulation must occur above Asia high or below Asia low. In this case, that we talk about Asia high, we got manipulation above Asia high. To confirm my trade, I usually wait for swing high or swing low. In this case, swing high. I want to explain this part right now. To be formed with short-term high on the left side of intermediate term high and short-term high on the right side of this intermediate term high. Once I see formation of short-term high on the right side of intermediate term high, my entry will be at the very next fair value gap after short-term high. You will notice that once short-term high is formed and we have fair value gap after it, the price after this short-term high, the price typically moves away from it. What does it mean? We will see that price simply run away from this fair value gap and maybe it's going to be a measuring gap or breakaway gap, but no. This makes this setup even more probable. At this point, the run from this fair value gap is going to be fake distribution to offer real distribution at the open. You will wait for the price to return to this fair value gap and enter at this institutional order flow entry deal. Of course, sometimes it's going to be complete fill, 50% of this fair value gap, but most of the time we will see this as institutional order flow entry deal, with the target being at high time frame level, which serves as your target for distribution phase. Okay, how it actually looks like with all this text right here. This looks like this. We got accumulation, London manipulation, we run Asia high. So this orange box is between 2 and 5 a.m. The green box is between 7 and 9:30 a.m. So we run this Asia high. It offered intermediate term high. Move lower, first retracement, short-term high on the right side, short-term high on the left side. Then continuation lower, we took out Asia low before 7 a.m. It offers this fair value gap. This means that between 7 and 9:30, most of the time it's going to be after market open, but sometimes at 7 a.m. So I don't want to say it's not going to happen before market open. We got retracement up back to this distribution fair value gap to continue moving down to reach our high time frame level. Here's an example. We got overnight consolidation. So basically we got Asia consolidation, we got manipulation, short-term low, intermediate-term low, short-term low. Next fair value gap right here, price run away, then retrace at the open. This color box, it's not any Asia range, it just shows power of 3 here. So it was at the open, we got move back to this fair value gap after short-term low formation and then continue going higher. Distribution, a real distribution was right here. Okay, how I built my pre-market plan? First, high time frame bias. Second, I consider external range liquidity and internal range liquidity. Third, overnight price action, such as overnight consolidation, London manipulation. So at this point, I'm going to consider power of 3 as well. And last one, New York midnight open relation with previous day high, previous day low level, and equilibrium of previous day range. Nice. Let's take a look example. It was Monday pre-market plan example from, I guess, last week. We start our analysis from high time frame chart, always. On this chart, what can we see here? Are we bullish, bearish? Will price need to go lower based on the current chart? Why? So, I'm going to give you some time so you can answer to yourself. Bullish, bearish. This is weekly chart, so let me zoom in a little bit to show you. Okay. What I was able to see here. By the way, it was posted in my pre-market plan, so it's not in hindsight. It was posted in my Discord before market open. So I posted exactly what I'm going to talk about here. So we can see on weekly chart we have extremely bullish trend. We have perfect uptrend where the price did trace down to the unmitigated change in the state of delivery, unmitigated order block, before continue going higher, right? After running above the all-time high right here, or buy-side liquidity, we saw the closure above this level. This means price closed above buy-side liquidity. Now we have a closure above high probability order block. So with this retracement down, actually, I can call this as fake break of structure to downside. And this means if people wanted to short, like because we formed weekly order block, it's going to be fake order block. Failed fake order block. Once we got the closure above this fake high probability order block, premium order block, we can consider this as high probability breaker block. So after running above all-time high, we saw the closure once again above this level, above this buy-side liquidity. Now we have a closure above high probability order block. Why high probability? Because this was fake breakout structure to downside and price wants to back to premium, for example. If it's not fake, we can anticipate reaction from this order block to continue going lower. But why it's fake? Because with this move down, all we were needed here is just mitigated and mitigated order block right here. Discount order block to continue going higher. What does it mean? This means that our high probability order block is now high probability breaker block, and the price doesn't need to go below that breaker block anymore. Now let's switch on daily chart. What can we see here? By the way, I just also want to mention here something. So since we got closure above this buy-side liquidity, we got run on external range liquidity, and now price is traced back down to the weekly breaker block and internal bullish fair value gap on weekly chart. On daily chart, we see this picture, exactly this picture like this. What can we see here? I'm going to give you time to answer to yourself. Also, this chart, your last candle is, on this chart, your last candle is, this is Friday candle, by the way, just if you want to find this on your chart. This is my 31 daily chart, so this is Friday candle. So where is Monday candle is going to be? Monday daily candle. Do we need to push us higher or lower? On Monday. We build our pre-market plan for Monday. We need to go here. Why? We can see price respected bullish daily breaker block. Got reaction from daily bullish fair value gap. Price never closed below this level. What else? What else can we see here? We can see huge wick here. What does it mean? This means on lower time frame we got huge down close candle and huge up close candle. As Lady Williams said, when we see the huge down close candle with sell side activity and opposite up close candle right here, lots of buy side activity, this means buy signal. Always. But where? Where we anticipate to see daily candle? We anticipate to see immediate balance. Why? Because with this wick, I usually consider this as an attempt to prevent formation of imbalance. Market always trying to prevent formation of any imbalances. So with this small body, it was really trying to do that, but simply didn't have time to complete it. This means with next candle, most likely, let's say 95%, you will see immediate balance. Immediate balance. This means complete fill with next candle with this bearish fair value gap. So this means daily candle must be around the top of this daily bearish fair value gap. Okay, let's read what I wrote here. We know that the price reached high probability breaker block on the weekly chart. This purple box. And now we know that we don't need to run below that breaker block anymore. Additionally, we run from external range liquidity to internal range liquidity We discussed this on weekly chart. Now we expect to see external range liquidity again. This means for our weekly bias, our weekly objective will be external range liquidity. But for our daily objective, for Monday, we are not interested in this at all. We're only interested in the candle that is going to be, I would say, high of this candle must be immediate balance, top of this daily bearish fair value gap. On the daily chart, I can see significant wick, huge wick from the daily fair value gap, and price never closed below that fair value gap. This wick indicates that price attempt to offer immediate rebalance but didn't have time to complete it, as I said before. We know that we are bullish and expect to see run to the external range liquidity again. I want to see immediate balance on that bearish daily fair value gap on Monday. Once again, for the entire week, our target is external range liquidity. But for Monday, specifically for the next day, our target is going to be top of the daily fair value gap. Once again, it's not hindsight. It was posted in my pre-market plan in my group around 8 a.m. I would say. Now we want to build pre-market plan based on where we expect to see the price on Monday. Okay. Let's say you opened your chart at 9-10 a.m. What can we see here? Here is like, zoom out a little bit. Same 15-minute chart. Okay, at this picture, I can see London run, Asia high. The trace down back to the Asian range. Before 7 a.m. failed to take Asia low. Okay, first confirmation that price at the open will most likely go higher. Second confirmation. We're now above previous day high level after taking this level before market open and New York midnight open. Second confirmation for us that market wants to continue going higher at the open. On this picture, I can see price was trading above equilibrium of previous day range. Right? We are above previous day high level. This means I would like to see this equilibrium of previous day range as my daily target. What does it mean? At the open, I would like to see continuation to my daily target. First target, my daily premium array, which is daily top of the daily bearish fair value gap. Right? After this, I will be interested in playing short with target at first Asia low. Why? Because this level was failed to be taken before 7 a.m. First target is going to be Asia low, and my second target is going to be equilibrium of previous day range. I'm going to repeat third time. It's not hindsight. It was posted in my group way before market opened. Exactly same picture was posted before market opened. We can see that NQ took out previous day high level and holding above New York midnight open, as I said already. Nice. Also, I can see that during London it ran Asia high but failed to take Asia low before 7 a.m. Back to the Asian range, failed to take Asia low. This means that at the open we will see continuation of the London move, where most likely it delivers us to the top of the daily fair value gap. Nice. So for my pre-market plan, I want to mention that at the open I anticipate continuation higher. And I'm not going to trade it since most likely we will not get retracement. We got two confirmations that price needs to go higher at the open pair to our higher from level. Since I would like to see daily PD ray, I want to see 15-minute market maker model, and 15-minute change in the state of delivery will be my confirmation. I will be interested in playing only short from the top of the daily fair value gap with target at Asia low, my first target once again, and my next target is going to be equilibrium of previous day range. So as we can see at the open, we simply continue going higher, where to the top of the daily fair value gap formed 15-minute change in the state of delivery. We got retracement back up to the main threshold of this order block and continue going down where? To Asia low. Since I'm day trader, I'm not really interested in playing like with huge stop loss, right? So I usually would like to see retracement back up to this order block, because if I want to play just at the open of the next candle, once we got the closure below this up close candle that brought this top, brought us to this top of this daily fair value gap, it's going to be huge target, huge stop loss and small target. Not best idea for us. We wait for the retracement back up, ideally to the main threshold of this order block, and then I want to play short with target at Asia low and equilibrium of previous day range. Once we get the test of the 15-minute change in the state of delivery and offered 15-minute market structure shift, we can say that we are inside 15-minute market maker model. I want to play short from the test of 15-minute change in the state of delivery with stop loss at buy side liquidity. Right here. Okay, I want to talk about really quick about time frame selection. Okay. As we got in our example, we got daily chart, daily fair value gap. This move up and down looks exactly like this on 15-minute chart. This means since once we got daily PDRA, we look for 15-minute structure. We look for 15-minute market maker model. For monthly PDRA, I use 4-hour market maker model. For weekly PDRA, I would like to use 1-hour market maker model, 1-hour structure. For daily, as I said already, 15-minute chart for market maker model. For 4-hour PDRA, I would like to use 5-minute market maker model. For 1 hour chart and 15-minute chart, I would like to use 1-minute structure. And for 5-minute structure, I would like to use 30-second market maker model. Once again, how we want to play market maker model? We want to have high time frame PDRA. We want to have change in the state of delivery. We want to have market structure shift. At this point, we can say we got perfect market maker model. Here is the setup. We got mean threshold retest, entry, stop loss, target profit Asia high, Asia low, and my final target is going to be equilibrium of previous day range. Once again, but we must keep in mind that we never tested equilibrium of previous day range before market open. What does it mean? This means that this level will be our daily objective for PM session. See, we did this level reversed. Okay, I want to share with you my pre-market plan for today. So for June 11. So for NQ, it was posted 8:55. Same study for NQ. So I got for ES. Let's talk about NQ. We were trading inside the Friday range. We were trading inside Friday range yesterday, where market moved from discount to premium, as I said already today in our lesson, and stuck at 1 hour inversion fair value gap. This night we saw slightly retracement down, but NQ simply tested equilibrium of Friday range again, then went back to premium. Well, if I want to see final run to the 1 hour smart money long, I'm going to explain this not today, but it's simply 1 hour bullish fair value gap. NQ must reach 15-minute bearish fair value gap that was formed today at 4:45 a.m. So at the open, I may expect retest of this level. What level? 15-minute fair value gap, but also I saw that top of this fair value gap lines up with possible 4-hour immediate rebalance. This means, which makes this area high probability area for me to short from there. I want to short with target at 1 hour smart money long and possible runner to the previous day low level. Once again, it was posted 8:55. Let's look at chart. 8:55. We got this fair value gap. So here is our opening. Here we go. We tested this fair value gap. I played short with target at 1 hour smart money loan, and my final target runner was previous day low level. Unfortunately, we did not reach this level. But why? Why I wanted to see this fair value gap? Because of this. We got Asia consolidation. We took out Asia high with London move higher. So London manipulation, then intermediate term high, short term high, back to this distribution fair value gap, continuation lower. Let me show you on the chart again. Asia, London manipulation, short term high, very next fair value gap from it. We chased at the open to this fair value gap and real distribution. So no hindsight again. So I usually build my pre-market plan only based on this. Only based on this plan that I always have. Only based on these levels. Okay guys, I hope it was helpful for you. If you're going to have any questions, feel free to ask in the comments or send me a direct message on Twitter or Instagram. I'm going to answer, and I'm going to try to find personal approach to explain this to you. Okay guys, thank you for watching, and I will see you in the next video.